All right, so we're going to give our 1 to 3 month view in gold right now. Gold market has been sloppy. That's basically what we want to call it. I want you to watch our big picture analysis, dollar, gold, and inflation, which we put out on Thursday, February 11th. It's about a 30-something minute video that I'm getting a lot of compliments on. Really going to get a sense for the realities of inflation, how gold and the dollar trade together, and what needs to happen right now for gold to move up and avoid a breakdown, or what actually would be a breakdown for gold. I'm going to give you some of that right now, but in that video I look at long-term perspectives that I think are very valuable, and you're going to be fascinated by that. So go watch that video. All right, so now we're going to switch here out of Redfin and go to /GC. And here you could see our gold analysis. These are the weekly cycle patterns in gold. On the bottom, that dashed line is silver. So we keep the silver cycle on here to help us understand what's going on. Each of these bigger dominant cycles right in here is made up of 2 half cycles, and you can see the important low right there. And right over here, see that? And quarter cycles, which you could see 1, 2, 3, and 4 right in there. So here's the, this was the breakdown in March, which made that a little bit late. And then they got back in alignment right here. Quarter cycle, quarter cycle, quarter cycle lows, quarter cycle low right over here. So you can see right there. And that minor cycle low says we're likely to be in a time period we could move up, but it's having a hard time doing so. It's still not breaking down, and if it can move up, it would be pretty significant. That level right over there is at 1880. That is a very key level. Above that, and it can scream, it would then likely test that resistance that it failed from perfectly at 1972, and maybe even work its way up to new highs. However, this cycle low is extremely important right over here, which is at 1667, and if it gets below there, it's going to change the whole scenario of these cycles that are pushing to the upside right now. This cycle is pushing up right here. This cycle is pushing up. It had a good rally. Then you got into this corrective period. So far, it has not been able to break down. In other words, the power of this down movement or corrective money flows is not strong enough to overcome what was upside power right on these cycles right over here. That is suggestive when this ends and this begins to move up and joins the upward pressure of the more dominant patterns, you get a spike to the upside. That, I think, is the highest probability for the next 1 to 3 months, where we look at February, March moving up, and then into April, and then a corrective period out into May. That is our 3-month outlook that we're looking at in here. If it were to break under this level, then these projections, the rhythm would look the same, but the projections would be lower. And overall, the longer term perspective would be very, very weak. I don't want to give too much away because I want you to watch the video that we did on Thursday where we talk about the longer term perspectives. But gold right now is in a very important time frame. It really needs to start moving up and get above that 1880 level to prove to us that it's getting out of trouble and the buyers are coming back. If it can do that, it could really spike. You could see upward gaps if that happened. If it fails and does not able to do that, well, you'll get the message. So it's pretty clear when you look at that. 1767 trouble, 1880, a nice short-term breakout, and likely to spike to the upside. That is our 1 to 3 month outlook for gold.